welcome to the Rupeeting podcast. My name is Ayush Abraham. We have two new members, one that you've been introduced to last week, and another fresh face for this week. And we'll be handling the podcast for you for the foreseeable future. So, if you guys could like to introduce yourselves and tell us a little bit about why you all are here.
Yeah. So, hi, I'm Sagnik, and yeah, this is the second podcast I'm on, and yeah, this is an interesting topic we're going to talk about.
I am Tejas, and I don't know what to say.
It's okay. So, they just joined us a little after Sharknik joined us, and we're all involved in doing the research not just for this podcast, but in general, equity research related. So you can trust us when we say that this took a little effort to do. But the topic for today is a little surrounding IT. Now, I think IT's got a bad rap since COVID because a lot of IT companies haven't done as well, and most people who have IT companies in their portfolios have been bled dry with companies like Wipro really tanking badly. So TCS, Infosys, Wipro, these are the common names that we hear in the IT space in India, and all of them haven't delivered as much in terms of earnings growth, profitability, revenue growth, mostly because of its international exposure. A lot of layoffs happening, a lot of people not getting into paying for these IT services that these big three that you can call it provide. And hence, they've disappointed not just investors, but their own employees who have been let go. But in all of this, there seems to be one small segment of IT that has remained fairly unscathed and might just grow faster than generic IT services might. So, do you guys want to start off and
Yeah.
introduce what this segment is?
So yeah, like you said, IT's been doing really bad, and that's the talk of the town for a long while. Earlier, it used to be that yeah, IT is that one thing you really need to have for growth. Although it's risky, but it will give you. So yeah, 2021 we got like 32% return for the year. But now as the lack and luster has gone away from those companies, there's another subsector of IT which remains with a lot of demand, and that is the ER&D sector, or the engineering research and development sector.
Yeah.
So yeah, so companies like that, let's say it makes the camera you use in your car for the reverse gear, then the cockpit the pilots use for airplanes, so stuff like that.
Basically, a
And
lot of technological advancement that involves niche research and which is more forward looking rather than generic
yes,
IT services that are just involved in ERPs, CRM,
right.
BPO, and other acronyms that no one cares about.
Yeah, so these guys, these ER&D companies, clients are have been growing a lot since the last few years.
Yeah,
As the economy grows, basically, research and development grows a lot. New
yeah,
companies come in, new startups come in, and they just boost the ER&D spends by a huge margin. And that's why these
yeah,
companies are doing really well, even in this kind of a scenario.
right. I think just to put numbers to that, as you mentioned
Yeah,
in 2020 or before that, IT companies were doing well. But in the past year, let's say the top five IT Indian companies that some of them that we mentioned, give like a
yeah,
14% return cumulatively, while some of the companies in this ER&D space have given double of that return at around 30 or more.
exactly.
And not only that, it hasn't just reflected in share price, but just their revenue growth as well has been monumentally higher compared to these IT service companies that we're used to listening about. Some of these number names that we have, Tejas, could you give us a few names of companies that?
So L&T has given a return of 15%, while Cyan gave a return of 74%, and
Right.
KPIT gave the maximum return of 122%. Like,
That's insane.
yeah,
122% in KPIT, I think IPO'd only in 2019 or 2020.
2019.
So
Yeah, 20.
yeah, so that's a very short term to make the returns that it has made. And all of these companies that they just mentioned are in very key sectors, whether it's automotive, medical, communications, network related, stuff like that. Things that are very forward looking, very rudimentary in its application, but very high end on its research. And as a segment of the whole 245 billion IT industry that we have in India, it makes a very small percentage, but it has immense growth opportunity that we see.
Yeah. So we don't know how much more it can go up, how much more rally we can see in this sector.
Shagni, what kind of value are we looking at for the R&D space?
For okay, so if we talk about what we are currently standing at,
Yeah,
so globally speaking, we are at 1.5 trillion US dollar market for ER&D space.
that means that much money
And
is going into this sector across the world.
yeah,
Okay.
so companies around the world, this is the whole market for ER&D services.
Yeah.
That is projected to go to 2.6 trillion. So that's like 1.1 trillion dollar
More.
increase in 3
Yeah,
years. So
that's
yeah, I
insane.
mean, think about it, forget share prices, forget when it was listed, these companies we are talking about, but if you want to go deep, just think about the operations or what their revenue share comes from, where like where self-driving cars or electric cars talk of the town like 6 7 years back. No, right now we get electric cars for 8 lakhs 9 lakhs, something like that.
That's
So
because
these
of the
companies
ER&D
are really
space
amping.
that we're able to
Exactly.
see that future come to life. Yeah,
Like every other car we see nowadays is going to be an EV. So the
yeah,
sector might go up exponentially.
Yeah,
incredibly
a
well.
lot
I
of
think even
governments
with,
have banned, right?
Sorry?
uh, a lot of governments have set a deadline for, yeah,
yeah.
I
So
guess
for India,
2027.
it's 30% of EV vehicle passenger vehicles should be EVs by 2030. It's
2030.
called the 30 at
Yeah,
30 campaign.
Okay.
Yeah, so that's clearly one space. So electric vehicles is one. It's a very good achievement from the ER&D space that we've seen. Apart from that, we're seeing a lot of we see 5G becoming a huge thing, which is also the result of a lot of R&D going into engineering services. So we don't really notice how much of an impact this segment has on our daily lives, but it really has made a huge difference. And if we talk about some of the clients that the companies that they just mentioned have in their portfolio, we'll be shocked. But that I think will come to later. Let's just keep talking about what the R&D space has to offer.
right. So even if it is like, if we talk about the geographical customer base, then it is not much of a difference than traditional vanilla IT companies. I
Yeah,
mean, think about TCS. It serves less than 20% of its whole revenue share to India. And that
yeah,
is kind of the same about ER&D companies as well. But yeah, the operations are pretty interesting.
yeah. So basically, even though the global exposure is high for ER&D as well, and that's a pain point for generic IT, that may not be such a pain point for the ER&D space because they've just considered it as a blanket permit that research and development expenditure should not go down under any circumstance,
All right.
regardless of economic turmoil or downturns in the global macro level. IT companies are not or are said to not reduce their expenditure on research and development because that's what's going to bring their sales back up, profitability back up, and relevance in the market back up in the longer term.
So they basically need to burn a lot of cash to make a lot of cash.
Exactly. Yeah. So that's basically the plan that these guys are going to employ, assuming that something actually bad happens on a global level, with Germany's economy already having entered a recession under a technicality,
Yeah.
and much of the eurozone already facing immense pressure. We might see
And
a little
US
bit of a crunch.
might
Yeah, exactly.
default on its debt.
Yeah, I'm sure that won't happen because they're not going to let that happen. Because if
Yeah.
the US defaults on its debt, then the world will collapse,
The
and
Nifty
they're
might
not going to
go
let that
back
happen.
to 10,000 levels.
Now, that's a very high, I mean, very low probability event. It's a tail event, as quant people like to call it. But it's unlikely that such a drastic global downturn would occur. And even then, the blanket permit still stands that research funding will continue, development will be made, and this segment, even in the longer term, will have promise, not just from an operations perspective, but share price and revenue and profitability perspective.
So,
Speaking of tech that no one asked for, I've just received 12 WhatsApp messages from Car Trade Tech to buy a Maruti Suzuki Wagon by logging onto their website once. So I think some tech should just leave, but some is required.
Yeah, and yeah, the tech you faced right now is probably some made by some vanilla IT company. So they have to go, dude.
That's true. That's true. It's out with the old and in with the new. And with that, let's talk about some of the companies that they just mentioned in the initial part of the podcast. And why don't you, Shagnik and Tejas, tell us about the four companies that we have in mind, what they do, and what kind of prospects we're seeing in their offerings. You all can
uh,
just pick
Right.
two and shoot, and I'll ask you all questions.
Scient basically is into healthcare and semiconductor business, which has like the 20% revenue comes from there. And
Right.
communication and network gives about 28 odd percentage of revenue, but it is
Okay.
also in aerospace and sustainable process. So like it is very
I think
diversified.
right. Scient, not, as you mentioned, not only is it just diversified, but it's known for its involvements and development in the aerospace and defense sectors because one of its very famous clients is this company called Pratt and Whitney, which makes a lot of engines for the US Air Force and for certain Boeing related components.
Oh,
So Scient is very present in the aerospace division, not just with India, but globally. And their tech has gone a long way to make sure that aerospace technology with the defense sector and commercial usage is at top notch levels. So that's what Scient is famous for. What's the next company in our
so
list?
Sadhnik.
Yeah. So the next company uh, is KPIT, and
Right,
apart from all the other companies we are going to talk about now, KPIT is kind of the odd one out because all of the companies we're talking about here are massively diversified into like um, they just said aerospace, communication, medical sectors, and even semiconductors now. But KPIT has chose to just stick to automobile
right,
or broadly two sectors: passenger cars and commercial vehicles.
right.
So they have been banking on the solid future of EV cars, then other commercial vehicles. They've been really, master at that. So they just stick to that.
And
And
any famous clients that we may have heard of KPIT?
yeah, there's BMW, there's Ford, there's General Motors. So yeah, but yeah, the other even Tata Elxsi serves some car clients which are in close competition with KPIT.
Right.
So yeah, that's
So
one
since
point
it's
to
Tata,
mention.
it's probably going to be Jaguar Land Rover that they're most affiliated to,
Right.
since they
Exactly.
have like a backward integration
Yeah,
system
and Tata
with
Motors obviously.
exactly, yeah. And now I think another tech company under the Tata leg is set to IPO. So there's a lot of room for. But I think there's one more company that we see in the diversified pile, Tejas.
So that is L&T. So L&T is L&T also has a very diversified portfolio, just like Cyient. It is in medical services, plant engineering, telecom, industrial, and transportation. So
Right.
that gives them an advantage, I guess.
Right. And I think since so we're talking about the technological service leg of L&T, but the L&T brand name itself is so large that most people would have heard of the accomplishments that LTTS has accomplished. So it's a very strongly backed company, much like Tata Elxsi, with a
Yeah.
large parent backing it. So these four companies are the ones in focus in the ER&D space and the listed ER&D space, and they seem to be, as we mentioned, good at some things and focusing on some things that are specific to their expertise and offering. But as a purely value based addition, I think we can jot down or narrow down on companies that are better in this four. So let's do that. And I think we have some numbers here in terms of revenue, EBITDA,
Uh,
profitability in general. And I think with Scient, we see that it is performed most poorly in terms of revenue with like a 4% CAGR across 5 years, while the others have ranged around 11 to 12. Then we see EBITDA margins also within the same range for all four companies, with LXC being the highest at around 28.
28%.
And yeah, that's extremely high for a tech related. I mean, actually, not because that's possibly what's
Yeah,
expected from a tech company.
yeah,
But
from
the lower
tech.
end multiples that we see with 14, 15% in the other three companies, that's fairly low. Profitability wise, elsewhere also LXC seems to be much higher off with a 26% PAT CAGR over the past 5 years.
While Cyient
So
performed
clearly,
only 5.6%.
exactly. So just from this much information, someone would assume that LXC is the way to go. And I think its stock has also appreciated by a significant amount in the past 5 years, wherein it went from 700 levels to now 7,800 levels. That's a 10x growth there itself,
Yeah.
more than 10x growth. And it's hit highs of 10,000 also, as we were discussing before the podcast began. So clearly, that should be the one pick, and that everyone should just, as we said, घर बेच के पैसा डालने का वाला scene. But when you look at valuations, is when it comes to a more minute difference, where LXC is now trading at 1 year forward multiples of 60 times, which is high for any industry, whether you're in tech or you're in generic TCS related tech. So that high of a valuation for a company that's had massive growth already may not sustain, or we don't know if there's a re-rating opportunity, but currently it's way too overvalued to even consider as an option to invest into. But those who did make money since its listing, or rather just post COVID, pre COVID periods, they must be having a ball of a time.
कोविड के टाइम पे लेना चाहिए
What
था ये.
exactly, yeah. But I think when we talk about valuations elsewhere, we see a much lower multiple with KPIT at 45, 46 times, LTTS at 26 times, and Scient at about 16 or 17 times. So, in terms of just discounted valuations, Scient looks like a better pick. But is there anything else that we have missed out on in considering which company to back or even consider researching for an R&D pick?
You mean like out of these four, like apart from these four?
No, just among these four. So we've discussed how what the four companies do. We've seen that some of
Yeah,
them have a very concentrated approach towards how they operate, with KPIT having sole automotive intentions, while LTTS, Tata Elxsi, and Scient are fairly diversified in how they operate. But then we see that uh, share price wise, KPIT has risen the most in this year, or rather in a 1 year span. But
yeah,
Tata Elxsi has had the best uh, revenue and profitability figures. So it's a lot of scattered growth that we're
yeah.
seeing
There's a lot of
across.
noise.
Yeah, there's a lot of noise. So how do we cut down that noise and say ki, if you had to back one or read about one stock, stock would that be and why?
Yeah,
It
So
can be a
then
different
I'd
answer.
say,
Anyone can have a different answer.
yeah, absolutely. So I feel like we the the choice lies in the fact that what sectors or operations they are leading. And although KPIT has risen a lot this year, so I mean, if we for once forget about upside, if I look at the forward, opportunities for companies out of all these four, and the most stable one, I feel like KPIT is the least exposed to global factors, but
Okay.
LXC, L&T, and Cyan. Anyway, all these companies are serving international clients mostly. 80% of the revenue base is from international clients, mostly
Right.
US, then Europe. And if we talk about, let's say, Cyan, then the rail revenues are probably coming from somewhere in Europe where they are making fast-based rail system. And once the rail industry just goes down, or let's say due to recession or due to some other macroeconomic factor, the transport
Yeah.
industry just goes down, all these companies are going to face that backlash.
Yeah.
So, but KPIT, I feel like the sector they are working in, it has a really long way to go, and they have less of an exposure to global macroeconomic factors. So even if I keep the stock prices out of my head, I feel like KPIT's business is the one to go with.
Yeah, so if I had to choose, I'll go with Cyient because it is the most cheap stock valuation wise, and
Yeah.
uh, I get a diversified portfolio as well. Like it is there in healthcare, communications, aerospace, and there is a lot of capex going in. So government pumping the money for transformation of India. A lot of money will be coming for that sector. So yeah, Cyient will be my pick.
Nice. I think LTTS sounds pretty interesting, not only because it has L&T backing it, so that's a huge parentage advantage that they have, but they stand right in between, not just in its revenue growth, but profitability, margin-wise expansion, and diversified portfolio that they also hold. Plus, I think in terms of a valuation standpoint, since they stand at around that 24 times, 26 times PE multiple, there is room for it to re-rate to a much higher standing since its average players are at around 30 to 40. So LTTS sounds like a good pick. But of course, as we've mentioned earlier several times, none of the information and data that we provide is supposed to be in financial advice in any way. It's all just educational in its content format, and none of it is recommendations. So it's just for you to learn and for us to discuss. And yeah, that's all about the ER&D space in India and abroad, and the immense potential that it has to weather the storm that the IT sector is facing. And hopefully, if any of you have invested, by any of you I mean the viewers, of course, have invested in this space earlier on, then good for you, man. And yeah, that's about it. Next week we'll come up with a topic that's closely related to tech, but a little different, but an internet stock nevertheless. Delivery is probably on the table for our discussion for next week. So we'll take it up then. And until then, that's a wrap.